Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Skylar Montgomery Koning, she called me up. She said, I want to be on. And I said, send me your note. And I'm like, whatever. T.S. Lombard. And they do brilliant work. She's director of macro strategy there. And they're in the middle of a research note. I don't know how many pages it is, 15, 16 pages. It's the absolute single best chart of the month. Skylar Montgomery Koning joins us right now, macro strategy, T.S. Lombard. Skylar, you got a scatter dot chart which compares the GDP of different nations and their economic surprise index. And basically it underscores how the U.S. exceptionalism is all alone with massive GDP, but even sterling, with the election being called, is coming on as well. What does that chart look like in a year? What is a scatter dot chart of our expectations versus actual GDP look like in 12 months?
Yeah, I mean, it's really interesting, right? Because that chart tells you two things. It tells you that the US is outperforming on an absolute basis. And I expect in a year's time that you still have that outperformance, because if you think about what the two global growth engines of the world are, they're the US and China. China's stimulating, but it's not the kind of stimulus that you did before. And it's not the kind of stimulus that's going to be able to make countries like Europe and the UK compete with the US. So in a year's time, I think you still have US exceptionalism. But right now, the story is very interesting because you're having convergence because of growth surprises, because we've had these massive upside surprises in US growth. Consensus has chased that upside surprise. Right. And so we're now getting downside surprises.
Well, we're getting downside surprises, so they say, but I'm looking at Atlanta GDP now, or I look at domestic final sales, and these are actually pretty good numbers. When does the party end?
Well, this is what's really interesting is we're getting downside surprises, but we actually care where the surprises are coming from as well. So if you look at Bloomberg's economic surprise index, it very handily gives you all of the components. And what's surprising to the downside is sentiment. And I think that's largely related to the level of inflation, as well as being a pretty politically charged year. And so I'm not as worried about the growth outlook. If it's sentiment, that's the reason we're surprising to the downside.
Skylar, I'd love to hear your thoughts here on King Dollar. I mean, you mentioned back at mid-month that the dollar was vulnerable over the short term. Do you still feel that way? I mean, how quickly do those views on the dollar change, and where are we headed from here?
Yeah, sure. So, I mean, for the dollar, in the short term, I'm still a bit cautious. We're seeing more growth convergence with global growth kind of catching up to US growth. At the same time, the Fed has had an asymmetric reaction function where, because we know they don't want to hike, the market is looking for a reason to be dovish. At the same time, positioning, it's come off a bit, but it's still stretched along the dollar. However, I am more positive in the medium term. Growth is converging, but as I said, U.S. growth is still outperforming on an absolute basis. And the key point is that we still need to price policy divergence. Yes, the market is looking for the ECB to cut before the Fed, but over the next year and over the next 5 years, policy pricing is pretty identical. So I think you need to price in more dovishness in Europe and especially the UK, and that should be supportive for the dollar.
So where do you think euro dollar heads from here? I mean, do you have a target there?
Yeah, sure. I mean, I think 105 is kind of the next point you're looking for on the downside. People are talking about parity because you get these massive policy divergence. I don't think we're quite there because the divergence is limited by the fact that, the Fed does want to cut at some point.
And so you're talking about yield differentials here, right? And I believe you're absolutely right, spot on, that they have been a huge, huge driver of currency movement. We can see that just the high carry currencies versus the low carry, but talk to me a little bit about dollar yen here. Something's going on there. Tom's talking about it all week long.
Something's
BOJ
going on there.
intervention.
They're going to intervene. You're going to be over the barbecue. Skylar's going to be, gaming out the British election returns.
That's right.
And you're going to have a massive intervention the third time here. Euro yen right now, Damien, 170.47. Wow.
Skylar, I don't want Tom to quote Euro yen anymore. He's going to start quoting peso yen for us. Talk to us a little bit about the yen here. Is it still a funding currency? And what other funding currencies sort of stand out to you in this environment?
I mean, it's absolutely still a funding currency. For carry trades to work well, you need three things. You need a significant interest rate differential, which you have with the yen. You need low volatility because you don't want to lose your shirt if you're only gaining 5% in income. And you need positive risk sentiment. And so it's certainly being used as a funding currency. And what you see over and over again is that unilateral intervention does not work. So while they may be intervening, it's just kind of stopping the bleeding rather than creating a reversal. For a reversal, you need Fed cuts.
So to both of you, Damien, this is important, folks. Pick it up here within the trilemma. If you're going to have a unilateral intervention, which never works, I agree with Skylar on that. Damien, what works? And the only thing that works is interest rates. The central bank has to allow 10 and 30-year to go up much higher than 1%.
When I look at my FX models, Tom, it's certainly real yield differentials that have done the heavy lifting, at least over the better part of the last 1, 2, 3 year period in terms of currencies. But Skylar, take me through that. What are you looking at here, as we push into the summer slowdown? I mean, what's going to drive currency performance?
Well, this is the thing. I think it's going to be a summer slowdown. It's going to be low volatility continued. We're having the push out of the cuts from the Fed. And so that means it's a continued carry environment. And so carry can be quite positive still.
I look, Skylar, at the summation of all this, and I can slip in one more question here. The election suddenly in your United Kingdom, is it really called just because everyone thinks this is good as it gets for the British economy?
I mean, I'm not sure I have a huge commentary on why it was called. I think from a market's perspective, it doesn't really matter. And I see two reasons for why it doesn't matter. The first is that labor has been in the lead by a significant margin for a very long time. Markets are good at pricing risk. And so if there was anything to price, it would be priced already. And the second is there's such limited fiscal space in the UK. We've all kind of been scarred by what happened with Liz Truss, and neither party really wants to play with that fiscal space. And so there's not a lot of change that can be made that can affect the economy and in turn markets. That's
great. You really steered around that for your general counsel. Skylar Montgomery Koning there on Liz Truss is the chief political correspondent for TS Lombard. Right now, with the markets open, the Dow up 73 points. I guess I should quote gold. That would be a good way to start with Axel Merk, 2,369. Axel Merk, there were gold bugs and silverites, William McKinley and William Jennings Bryan. And then in the 70s, when I had wider lapels, there were gold bugs. Where are the gold bugs now? Is it just about central banking buying, or is there a retail enthusiasm for gold?
Yeah, good morning. I thought the golf talk was the interview of the day, but let's talk gold here. Until just recently, it appeared that the U.S. retail investor was absent, at least on the exchange traded products. They've been buying physical gold, but not so much on the ETFs. Mostly the Chinese retail buyers, and obviously the Chinese central bank as well and the like, have been buying. Of late, that might have changed. I say might because a week or so doesn't make a trend yet. But yes, much of the gold rally has happened without broad retail participation in the U.S.
What does that signal to you?
That's an excellent question. I mean, if you are a gold bug, then it means there's a lot of upside potential when those folks finally come in. If you are on the bearish side, you can say, well, it's been lukewarm. It's only the Chinese that have been buying. At some point, the Chinese central bank will stop buying. And by the way, the Fed is going to be more hawkish and so forth. So with any of these things, gold is this one asset that you're always glad you had, but never quite know why you want to have it for tomorrow. And so people put different spins on these stories. As I think you're aware, I've been a gold investor for many years. And through the ups and downs, and it's but the psychology of gold investing is a completely different story.
I look at gold back 20 years. You can do this on the Bloomberg, folks. I'm doing this semi-log where percentage change matters. And, there was a quietude to gold from 2012-ish on over. It actually went down some. But it's amazing on a log chart, Damien Sassower, gold with this leg up to 2346 back 20 years is a legitimate trend and really isn't extended. I didn't know that.
Well, for me, it's really what does drive gold. And Axel, my question for you is, I've always been taught that real yields are probably the best driver of the price of gold. But, is it indeed supply and demand at this point? I mean, is it really central bank buying, this asymmetric sort of return profile for gold that, hey, now that these central banks own it, they're not going to be selling it. And, the price only has up to go from here. Is that kind of what I'm hearing?
Well, price, it's always supply and demand with any asset. Yes, the real yield is what we have been quote unquote taught. But the one thing about gold is correlations aren't stable. Whenever you think that you find a correlation, it starts to break down. Take a correlation to equities. Correlation to equities in the long run is zero, but it doesn't mean it's never correlated. It sometimes goes with the S&P and sometimes against the S&P. Always just enough to frustrate people. But indeed, it has decoupled, so to speak, from real yields. And most of what we look at is longer term real yields, like a 7 or 10 year, but those have broken down as well. Now, keep in mind that there are plenty of reasons to be a gold bug. I mean, it's you just mentioned some sad geopolitics. I happen to think that what we see in Gaza, also in Ukraine, are just symptoms of a new era. And similarly, of course, the Chinese, they know that the dollar is being used more as a financial weapon. So all these things, if you want to be the glass half full guy, that is it. But at the same time, right, in the short run, anything can happen. Gold has had a fantastic run. Well,
Axel, talk to us about the broader precious metals complex. I mean, are there opportunities for silver here, for platinum, palladium?
Well, the silver folks have finally a day to celebrate. I mean, it's the silver for a long period lagged the price of gold, and silver seems to have broken out from that a little bit. I'm a simpleton. I focus on gold because I call it the purest indicator of the mania of policymakers at the Fed and other central banks around the world. The moment you go to other metals, it's industrial dynamics that play a much bigger role. And it may be in part that manufacturing PMIs around the world are picking up, suggesting that on the manufacturing side, we are not entering a recession. And that's why silver has been doing better, because silver doesn't do so well in a recession usually.
In the time we've got left with you, you've done a lot of work on dollar. And of course, the shock here has been strong dollar. Reaffirm the case that the dollar could fall apart.
Well, we're talking on a Friday, so I might as well speculate. I just mentioned the manufacturing PMIs. The rest of the world is more manufacturing heavy than the U.S. They are strong, so the rest of the world, maybe the central banks won't be easing quite as much, will be more hawkish. We don't see that. That's speculation. In the U.S., we're more services driven. The low-end consumer is weakening. The interest rate hikes are taking a bite very slowly, so they're not biting really at the high-end consumer in part of because of the equity rally. And so maybe the U.S. is going to be more dovish, especially with Powell's bias. And on a day like today, that story makes sense, but I think that's pure speculation.
No one's listening. 12 months from now, where's gold, Axel? We've got to run. Where's gold in 12 months?
Well, we have a new administration. And last time that Trump was elected, should he get elected again, and you talked about the gold bugs earlier, all the problems were solved. And then suddenly there was no interest in gold anymore until late in the administration. And obviously it's usually not just who is in office, but the underlying drivers. But the storyline may well change early next year.
Axel Merk, thank you so much on gold. He's with Merk Investments. Right now, Luis Costa joins us. He's global head of EM at Citigroup, in a really important position for Citigroup with all of their foreign reach in that. Luis, I want to go to something you've brought up as a Renaissance moment that I've now heard. You're the third person in, I'll say, 8 days that have said, finally, Turkey. Why is it now finally, after the massive debacle, the depreciation of Turkish lira, the chaos within their two-tier domestic strategy, why now, finally, Turkey?
Hi, thanks for having me. Yeah, finally, because finally they are trying really hard to converge to a more orthodox economic policy. And we know that was the issue in the past. But now, after meeting so many policymakers from the central bank and even the wording coming out of the government, it feels like there's intention. They've been pursuing it for at least a quarter or so, and this is starting basically to show in the effects in the macro numbers, generally speaking.
For Global Wall Street, it's a name so many people know, Mehmet Simsek. And in the time that I spent in Istanbul, I really got to know him quite well. Is this a Mehmet Simsek? I mean, ex-Merrill Lynch, now working with Erdogan in Turkey. Is this a Simsek revolution we're seeing in Turkey?
I wouldn't say, Simsek revolution, but we have a very capable person at the helm of the economic policy now. And he's absolutely determined, right? So if politics allows, he will continue basically to develop this orthodox economic agenda, which means tighter monetary conditions, which means some degree of deceleration in economy. But all we know, if you put this all together, it's very positive for the Turkish lira, hence how longer the lira.
So, Luis, I mean, this is incredible. I mean, this is, first of all, great to speak with you again. I mean, I opened the show this morning talking about the concept of idiosyncratic carry and how emerging markets can kind of fill that gap. I know you mentioned Turkey here, but talk to me about some of these other local emerging markets, like, for example, Egypt, Nigeria. I'm hearing about Dom Rep. I'm hearing about Uruguay. I mean, are those viable markets for institutions to carry in the short end?
They are viable. They are viable, of course. I mean, different strokes for different folks, but they are, depending on the jurisdiction, depending on the markets displaced, they tend to be more illiquid. So not every client, not every global investor will have the appetite to be in liquid markets like this. But you mentioned something very important, which is the search for carry. We are in this environment where global financial volatility is at almost at cyclical lows. Right. So, and in an environment where we are still seeing some degree of deceleration coming from the developing markets, although the U.S. is definitely hotter than what we expected it to be by now. So, but if you put this all together, all we know, it feels like a market where you're going to be looking for carry opportunities, front end of the curves, a high yield carry or high yield T-bills. And frontier now, after so much correction in that economic policy, Egypt, you mentioned, right? Yeah. They let the currency go, they hiked rates. So some of these jurisdictions are offering very interesting opportunities for investors now.
And another high yielder that's getting a lot of play in recent weeks is, of course, South Africa. And we have an election coming up next week on Wednesday. Talk to us a little bit about, as an investor, I mean, the Rand has rallied into this election. Talk to us a little bit about how you can invest in South Africa. Is it just a metals and mining play on the equity side? Is it really a carry play on the fixed income side? I mean, are SAGBs back in vogue?
Yeah, that's SAGBs back in vogue. That's right. We love the bonds. We love the bonds now, and we have an overweight in the bonds. We have an overweight in the currency as well. And you mentioned this commodity rally we had recently over the past 3 months. I mean, in terms of trade for South Africa, they have reached a new highs. So we continue to see this, and that filters through the currency, that filters through the markets. Ahead of the elections, there was a lot of investment premium priced in. We know that this political premium is finally receding. So we continue to like South African bonds now. We believe that that's where most of the premium is located, on the bonds.
To both you, and let me go to you, Damien. For mere mortals, listen to this babble on EM. Can they acquire what is easily acquirable, an ETF that captures so-called carry?
I don't know of one. Luis, do you know of any, a vehicle for a retail investor here in the U.S. to really kind of isolate the carry trade and really invest in it? I don't know of any.
Well, there are many. I'm not going to recommend an ETF now. It's not my. they are not paying me for that. But it's there are many ETFs out there, right? So, but it's the options are available, and there are plenty.
I want to get you in trouble with your general counsel here, Luis. I know you're doing an EM thing. Let's look at the emerging market, Japan. The fact is, on a Friday, I'm looking at 170 euro yen. Just a 2-day exponential moving average. I'm well through the intervention levels of 2 weeks ago, 3 weeks ago as well. Off of the Citigroup desk, do you look for Japan intervention action into our Sunday evening, their Monday morning?
It's very tough to pinpoint the timing, and the last times the markets tried to pinpoint the exact timing, they were wrong, right? Or the BOJ was actually a lot more sensible and careful in not necessarily impacting the markets much. We know that there was a lot of selling of dollars in the past when they felt uncomfortable with certain levels. Right. But most importantly, this frenzy on the yen continues to impose investors towards carry baskets. Right, so but we know using the yen as one important funding currency. So if that continues basically to support the carry basket trade out there.
Right, Luis, thank you so much. Luis Costa, Citigroup. Today's front page is a daily look of the front pages. Pumped for Memorial Day, Lisa Mateo.
Ooh, I am. I'm already almost checking out. All right, so yesterday we told you Live Nation. Yeah, thanks. Being sued by the DOJ. So the Wall Street Journal has this good breakdown of who is making money off of your concert tickets. So it gave the example of a $100 ticket, which I think is really cheap for a ticket, but $90 goes to the artist, $10 goes to the promoter, like Live Nation. And then customers typically pay fees on top of it, right? You know, when you're done, you get the fee. So 20% or more of a ticket's face value. So a ticket selling platform like Ticketmaster would collect about $5 of those fees. The rest goes to the venue. And then the venue also collects for things like parking, food, alcohol spending. Live Nation owns and operates the venues nationwide. And then finally, the merchandise you have, because the artists partner with merchandisers who covers the $25 cost of making the item, and then they split the profit. So they keep $7, passing $8 to the artist. You know, you see, and then how much the venue gets too.
Isn't the heart of this debate that most concerts you want to go to, you can't get tickets? They're just sold out.
No, I mean, I'm trying to get the tickets for the Stones. They're at MetLife on Sunday night. You know, $250 a ticket, Tom. I mean, that's pretty expensive. They're pretty expensive.
Yeah, you can wave to Pennsylvania on that.
I mean, brown-eyed girl, you know. So I mean, but seriously, I mean, like if you just look at them it's amazing how many people get rallied up. I mean, there've been rallies in Washington against Live Nation. I mean, it's real stuff. I mean, senators. It's become a real kind of election talking point, also. No, Lisa?
Is there discussion, Lisa, in the articles you've seen, that it's really about you can't get tickets because that $100 ticket is priced too low? They're more like what Damien's talking about.
Members of Congress can't get tickets.
Yeah, that too. And a lot of people are asking, well, why am I paying so much for this? Like, where is my money going? Yeah, who's getting my dollar? That's what people want to know when they go to
demand. I looked at Taylor in Paris, and I just, Afterthought wanted to go. Both Vet Bill and Kennel Fee wanted to go. I mean,
not happening.
If we don't get the Gulfstream, we got to put the dogs in the chairs in the plane. It's like outrageous. Next.
My goodness. Okay, Paramount Global reaching a new multi-year distribution agreement with Charter Communications. So this is really big for Paramount because, the company's in talks with Skydance Media, and a blackout would have really hurt those efforts. But now all of Paramount's networks, including CBS, its streaming services, will continue on Charter Spectrum cable systems. So subscribers to Charter Spectrum, they're going to continue to get those Paramount channels like BET, Comedy Central, Paramount Plus with Showtime on top of it. And then Charter's also making some services available for purchase to its internet-only customers on top of it.
That's a local story, but I'm looking at the stock charts for PARA and Warner Brothers Discovery, and to be blunt, they've had a bad 10 days.
Yeah, no, I mean...
Did you know there's a bull market? You don't know it looking at those stocks.
No, it's a really good point. And discretionary, I just looked at the S&P, the consumer discretionary subsector is actually now down year to date, which is kind of interesting.
Okay, you're diehard. If Warner Brothers loses, if TNT...
they did.
NBA.
I think they will. So the NBA deal for guys is going to be $7 billion a year for 11 years. You want to talk about a big pot to split up? There it is. And it looks like TNT and TBS are out. So it's going to be Amazon. It's going to be Disney. It's going to be interesting.
Yeah, we'll have to see. Lisa, what else?
Yeah, and that's exactly it. So it's going to be Walt Disney, Comcast, Amazon. This was actually in Lucas Shaw's newsletter.
Lucas was in town. He's the best.
Yeah, so he had the great insight. So this is what they found, that they're finalizing agreements with those three. They're going to pay the league an average of about $7 billion a year over the next 11 years. Disney is going to get that biggest part of the package. That includes the NBA Finals. All three would split the other playoffs and regular season. But what I like what Lucas did is he said that if the NBA signs, Warner Brothers can match them, but it's going to be tough because Comcast is going to put out games on NBC, which is a broadcast network. Warner Brothers doesn't have one of those. The Comcast also involves minimum number advertising impressions. That's easy for NBC, but for Warner Brothers Turner Broadcasting, that's a little bit tough there.
I can't keep
So it's a lot to keep up with. I mean, but Warner Brothers could come back, with the right to match it, but they could also go for like a smaller package of NBA games.
I miss Brent Musburger. Next.
There you go. And New York City, you had mentioned this, Damien, those charging stations coming to New York City. It's a company backed by Google. It's called Gravity.
Okay.
And they want to bring, they're calling them quote unquote trees because they look like they're tall, thin, slender. So they're going to fit right into the landscape in New York City, they're saying. They're going to be curbside and they can charge your car in as little as 5 minutes.
Wait, I thought it was going to look like a tree. I thought they were going to disguise them because if they're just going to be metal poles, I don't like that.
It's a metal pole, but it's as thin like that. If you put it next to a tree, the trunks look the same.
Did you say
There's no
charge a given Tesla or whatever in 5 minutes?
In as little as 5 minutes. One will take up to 13 minutes. The other model can take up to 5 minutes.
Because now
That's
they're
quick.
like long. They're like 40, 50 minutes an hour.
You have to sit sometimes for like 25, 30 minutes to charge your full car.
When
but
do we see
that'll
these?
give about 200 miles.
When do we see this?
But they're going through the city. They're asking the city if they can bring them to the city
Asking?
streets. Yes. So it's going to be a process. So you might not see them for some time. They are in parking garages on West 42nd Street. Though.
There are your newspapers on this Friday. Lisa Mateo, thank you so much. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.